Hello, this is Richard Patterson. It's January 21st. This is the real estate update. We update this monthly, but sometimes a little less frequently. We're looking at the NAREIT REIT Index. So this is an index of real estate investment trusts, REITs. This comes from the NAREIT site, but we also use a REIT index from the Dow Jones Industrials in our stocks and commodity quote system from it. And so we use that as an alternative, but that's a little more of the stock market's viewpoint of REITs. This particular REIT index can get involved in the actual cash REITs, a little closer to real estate, okay? But this is not housing prices, okay? But we find similar timing, similar performance, therefore we just call it our real estate index. All right, at any rate, you can see that the REITs topped out in 1972 for a 9-year cycle, rallied up for a top, pulled back for a 9-year cycle bottom, rallied up for another top, put in an 18-year cycle. And you can see that was the more dominant, worked better than trying to follow the 9-year cycles. Okay? And then we see it pulls back into another 9-year cycle bottom, and once again you can see that more dominant, easier to see 18-year cycle bottom to bottom. Rallies up. Now we see a little more improvement from the 9-year cycle, and you can see it declined ahead of the 2001 recession, bottomed ahead of the 2001 recession, and real estate was even rallying during the 2001 recession, I believe. I think people were literally pulling money out of the stock market and buying real estate or throwing their savings into that rather than just being involved in the financial markets. And apparently the economy couldn't have been that severe other than they wanted a safe haven maybe. But at any rate, you can see it then rallied up and put in another 9-year cycle top. But there's something more important going on. This is an 18-year cycle top, okay? But it also put in 36 and 72-year cycle tops. And I've said this often, that during that time, I found Gulf oceanfront lots, or fairly close. Some of them really weren't oceanfront, just a little further back from the coast, from the beach. And they rallied from $30,000 to $400,000, $300,000 to $400,000. Now, it then come out of that super cycle top into a super cycle bottom, also of 72 to 36 years. So this particular index behaves more like the stock market than it does the commodity market. But there is some similarities. And we feel the economy is really more like a commodities market. And stocks can literally break away and do their own thing relative to the economy, believe it or not. I'm sure some of you might say you fully believe that. And the same thing for real estate. At any rate, you can see it just crashed here, okay? And those same Gulf lots come down from 300 to 400,000 back to 30 or 40,000, 90 to 100% retracement. And there's definitely property somewhere that it was more than 100% decline, depending when you calculated. Obviously, go back 100 years or something, you'd say, nah, it only come down 50 to 70 or 90%. There was some areas it was only down 20%, things like this. But you can just see how serious these cycles are, especially super cycles. It was time for depression, and we got it in the real estate market, but we had this 1925 to 29 explosion like the stock market. We had this mania, this panic, okay? Irrational exuberance. So what goes up fast normally has to come down, not necessarily fast, but come down more than it really should. And that's exactly what we did. We really put into real estate too cheap. Now we've had a nice bull market, and the best forecast, as you can see, this little line I've put here. Okay, that's a Gantt line, I guess, or if you Gantt chart, like a project manager, sometimes I call it a timeline. It's kind of like a window of reversal kind of line, okay? And what we have is that sometime 2016 to 2019, I favor 2017, 2019, we can have a top in real estate. I think it's going to wait towards the end of this decade. And we're also due for a top for the economy then. We're due for a top in the stock market. We're due for a top in commodities markets. We're going to have a recession by the end of the decade, but it only should be a standard recession. Therefore, it may not come down all that much. You can see this decline here. We may only have that kind of a decline for real estate. For this 9-year cycle, it hardly come down at all. It kind of like hiccuped or yawned a bit, and that was about it. We may have that. It may once again bottom better and even earlier than the recession economy and actually turns up like it did in 2000 to 2001 when the rest of the economy was doing poorly even in 2001. There's all kinds of possibilities. It doesn't have to match up exactly with the stock market economy by no means. But the general idea is we probably have higher REIT prices higher for this index. I think because the stock market's going higher, then the stock market version of REITs will go higher. Now, if you relate this to home prices and commercial properties and whatnot, you're going to find something similar that probably didn't rally this well, although I understand some properties have. I do think the rich in their very highest tier of real estate are paying way too much. I don't think they're very intelligent of what to pay. I think they're using it as a safe haven. They're kind of scared where to put their money. And I think they're making a mistake. But as you come down to lower tiers, there's still value to great value for some of these properties. Okay, so real estate is still a good buy. It hasn't rallied as far as this REIT index has rallied, and it should rally still further. So I think there's still good value in homes, rental properties, the smaller portion of real estates, and not the real expensive stuff. I wouldn't be buying $1 million homes and higher. I just don't think it's there. But under $1 million, I think there's some very good value from 300,000 and lower. I think there's some regions of the country is extremely good value. So very interesting of what's going on here. But you can see this negative reversal in 2013. It's pulling down for a 3-year cycle. And I say if it didn't bottom in 2013, it should bottom early 2014. By 2015, we should see this index higher. Okay, so we are still super bulls for real estate because we think the super cycles are up to the 2030s. But along with that will be higher interest rates for the 2030s, albeit a super cycle bottom is due at the end of this decade. So you might pull interest rates back a little better than you would for some of these markets. Okay, we also see inflation higher to the 2030s, but we don't see any explosion type interest rates anytime soon. The highest, fastest run up will probably be in the 2030s. Interest rates will speed up to keep up with it. And we don't really see interest rates higher than the 1980s, or 1980, nor do we see it higher for inflation in 1980. So that can temper things a bit. But the real estate should make new all-time record highs going into 2030s. I think the nation will do well. I think the whole world will do well in real estate. But I do not know the actual annualized return. Normally you assume there's a less of a return than the stock market. But some people are beginning to think there's less risk than the stock market in real estate. So you got to play one another off. Again, you get back to your portfolio thinking. All right, this is a chart of inflation in case you didn't catch some of our macroeconomy videos or our YouTube videos in inflation and interest rates. But even inflation is due to bottom, rally up for a 6-cycle top, okay, into the 2030s. It had a 27-year cycle top in 2008, collapsed into a 72-year cycle bottom for the financial crisis. Eventually, we think rates rally, but I don't think they rally over 10%, but they could. They could go to 15, 20, 25 for all I know, relative to the cycle. The door is open. But when you throw in all the analysis we do, everything we can think of, it looks as though we'll manage things differently and better, and we just don't feel like we want to be on board of scaring people by the 2030s of seeing record highs. Now, that's so far out, I suppose one could say, who cares? Take it one step at a time. But what I want to say is I don't see hyperinflation like in the next few years. I don't see a super rise in interest rates. I think those people are a little on the same side and trying to scare us here, throw us off track so we don't make the money we should be able to make out of real estate, buying businesses, building businesses, expanding, investing in the stock and commodity markets, okay? All right, this is an interest rate chart, and you can see 27-year cycle, beautiful upside down UV pattern, another one, but it's actually for a 54-year cycle, more dominant, more important. That's the famous Kondratiev cycle. Here's another 27, makes a beautiful 54-year cycle. Here's another 27, beautiful and very volatile, dramatic 54-year cycle run up to 1980. We used interest rates to kill the inflation. Interest rates were not rallying fast enough to kill inflation. Paul Volcker said, rally it even faster than inflation, kill it. All right, so then it comes down, rallies up into a 27-year cycle tops, coming down into a 72-year cycle bottom, which may not show up at the end of this decade, but I'm concerned of a truncated bottom, meaning we may have seen the lowest interest rate by 2012. It's just for this decade, interest rates may not be able to rally all that far. But during the 2020s, I believe we will see faster and higher interest rates during the 2020s, and then still faster and higher, can surge higher into the 2030s to be right in line with higher commodities, stock market economy. Granted, the stock market can have a slump in 2030s and can be timed a little bit different because the commodities inflation gets so high, but interest rates will be right up there with that inflation and commodities. Okay, but again, I don't think by the 2030s we'll see any higher inflation or interest rates we've seen than during the history of this nation, or at least relative to 1980. Nevertheless, you know, if you go back and look at the 1950s, 1970s, basically interest rates rallied, stock market was still a bull market, but not necessarily a great one, and inflation kept speeding higher in the 1980, but real estate rallied, folks. It rallied. Okay, at any rate, the best forecast is we're still long-term and super long-term bullish real estate. I think we've seen a major bottom, major floor price. Thank you.